Let's get to the big earnings of the day. First, a look at the banking sector. Heavy earnings day for the banking sector. While Axis Bank's second quarter numbers have disappointed with a surge in provision and bad loans, HDFC Bank has met street expectations with its performance. Meanwhile, Kotak Mahindra Bank has topped the street view with a strong show. Ritu Singh is here to wrap the earnings from the banking sector. Ritu, take it away.
Thank you for that. Let me start with the Axis Bank numbers, which were a big shocker for the street. In fact, profits are down 89% over last year at a mere 319 crore rupees. This, of course, is on account of the provisional increase that the bank has undertaken in this quarter. Net interest income was also a mere growth of 11% over last year. The main focus area, of course, has been the asset quality, which deteriorated sharply. So gross NPAs increased to 4.17% of the total book and net NPAs at 2.02%. Why is this? The watch list that the bank says, which stood at 20,900 odd crores, is reduced by 32%. 7,288 crores of that has slipped into NPAs. This accounts for 89% of the total slippages from the corporate book. So now the watch list stands at 13,789 crores. The fresh slippages stood at 8,772 crores, the bulk of which I mentioned were from the watch list. ARC sale was also 2,316 crores. In fact, we reported that SR sale was one of those large accounts which was sold to an ARC in this quarter. So mostly optically, if you look at it, the increase in provisioning and the increase in bad loans could also be taken in a positive sense that the bank has gone ahead and recognized the pain. Other than this, HDFC Bank and Kotak Mahindra Bank, no big surprises there. HDFC Bank reported a profit growth of 20%. This was aided by a good growth in operating profit and other income. Net interest income grew by 19.6%. Margin shrunk a little to 4.2%, but this is because the bank is carrying excess liquidity. It was business as usual in the asset quality. Marginal change from the previous quarter, more or less flattish. Advances growth was slightly lower than expected at 18%. Even for Kotak Mahindra Bank, profits rose significantly by about 42.8%. Net interest income rose by 18.9%. No surprises on the asset quality front. Margins also fairly stable at 4.47%. And on a consolidated basis, it was prime securities and life insurance business which really aided the consolidated profit growth.